Hello, this is Manesh Patel with Ichimoku.org. Today's workshop, we're going to discuss the Japanese trend-based system that was created back in 1929 called Ichimoku Kinko Hayo. Ichimoku in English translation means at one glance. The whole idea of this technical visual system is to be able to analyze any instrument in any time frame within seconds. So at one glance, you should be able to determine everything that you need to know about the instrument. I've been trading Ichimoku since 2003. The system has allowed me to turn the corner from becoming a retail trader to become an institutional trader. It's been the biggest difference in my trading career, and the reason why is it allows you to keep things simple and trade the probabilities. It allows you to eliminate the subjectivity, and it basically allows you to do precision trading. That means it's rules-based trading where you trade probabilities down to a T. When I started trading, Ichimoku was mainly used for the Forex market, currency market. Today, it's used pretty much for every instrument out there that you could think of. From the currency Forex market to global stocks, for like US stocks, currency, US stocks, China stocks, Singapore, London, Brazil, and so forth. It's also used for various future products such as gold, silver, lean hogs, copper, and so forth. And it's also now used for crypto too, from Bitcoin to Litecoin and so forth. So pretty much if you could sit there and chart it, you could now sit there and use the Ichimoku system. Ichimoku is one of the most popular indicators out there, and it is a standard indicator out there that's free, that should be available for all the charting and brokerage platforms out there. So you shouldn't have to pay anything for the indicator for itself. Along with the popularity also becomes the negative things, such as a lot of distortions, a lot of marketing things are happening around it, and so forth. It is very unfortunate. A lot of people have now taken Ichimoku and made it very, very complicated and defeated the whole premise that Goshi Asada came up with back in 1929. Let me give you an example. The whole system is based on parameters such as 9, 26, and 52. A lot of people think those numbers are related to the number of rice trading days back in 1929 in Japan. They're not. And a lot of people have sat there starting to change these formulas and so forth, thinking that basically they are archaic. They're not at all. Those numbers basically that Goshi Asada created, I've been using for years for any instrument out there, and also any different time frames, even down to range charts, tick charts, and so forth. What has worked in the past is still working today and will continue to work in the future. Reason why those numbers were not based on the number of Japanese calendar days or rice days they planted or anything like that. A lot of people make that assumption, and then from there they've sat there, wrote a lot of articles, a lot of videos and everything, and published them on YouTube. And it's just, unfortunately, it's complicating the system when it should not really be at all. Due to all the different misinformation out there, what we've done is we've merged all our website and resources for Ichimoku into one website called Ichimoku.org. Some old websites that used to be out there for years are kumotrader.com, ichimokutrade.com, and various other Ichimoku websites that we've had where we're sharing the information technology and on Ichimoku to various people out there throughout the world. And what we've done is we pretty much merged everything into the Ichimoku.org, so it's a one-stop shop for everything that you need. So the biggest thing I'll encourage people to do is go to Ichimoku.org. There's a free ebook there. Fill out the information, get that ebook. And the reason why is that ebook, believe it or not, is the most traditional ebook out there on Ichimoku, and has everything that you need to know, from the indicators to the formulas to the strategies and so forth out there. You really don't need to go out and buy any book on Amazon or anything, not even the one I published at all, because mine deals with back testing. If you want a pure good resource that basically tells you everything about Ichimoku, download that ebook, and it pretty much has everything in there. We have not changed any content in there at all. This has pretty much been the traditional free ebook that's been available on the web for years and years and years and so forth. So sit back and relax and let us teach you everything that you need to know about Ichimoku. This workshop is going to give you a high-level overview of the Ichimoku system completely. And then what we've done is we've broken down each of the 5 elements that makes up the system into individual videos so you could see exactly how those 5 elements play, and we go through details in those individual videos. Okay? So let's begin that journey. Before we begin the tutorial, let's go through and go for our normal disclaimer. This is our normal disclaimer state. This is for education use only. We're not soliciting to buy or selling anything at all. All the information is owned by EII Capital Group. It cannot be copied or distributed without our written permission. We are broker neutral, so we support all the various charting and brokerage platforms out there. There's just some of them out there. As we mentioned, Ichimoku is a standard indicator that should be available for all the charting and broker platforms out there. The very first thing we like to do is to attribute to the founder of Ichimoku. I am not the founder of Ichimoku, neither is anyone else that may claim to be. Ichimoku, believe it or not, was founded by Goshi Asada back in 1929, 1924, or so forth. Okay, here's a history of Goshi Asada here. But basically, he created the Ichimoku system back in 1929 and was viewed one of the most successful traders in Japan. His work, believe it or not, correlates very closely with W.D. Gann's work here that also started in 1929. So if you compare a lot of things from Goshi Asada and W.D. Gann's work, you'll see that there's a lot of similarities between all the different things that they did back in 1929. The key interesting part was that they were far apart from each other, and believe it or not, there's no internet or communication back then at all. Okay. So that is what Goshi Asada looks like in the information here. One misconception I like to sit there and talk about is a lot of people talk about how basically they bought the original books of Ichimoku and so forth from Goshi Asada, and then also his pupils afterwards. I have all the original books and so forth. There's no hidden secrets in there at all that a majority of people claim to have and starting to charge at all. So I would not be caught up in that marketing scam at all. The Ichimoku books, believe it or not, the free ebook that we have goes for everything that basically is in the original books plus more. The only thing it doesn't go for is timing elements in there, and they really don't work at all right now, those timing elements at all. And then the other thing he does is he goes through chart patterns, which we pretty much cover in modern technology today. So the key thing that's working and that is in those original books are everything is outlined in that free ebook that you have, so you do not need to pay anyone for any special treatment or getting any special secrets or anything like that at all. If you remember, I told you that I basically was a pure technical trader that went down a technical path just like you guys did from the retail perspective and turned that corner to become an institutional trader. So I've gone down the huge technical path of learning every technical system out there virtually and so forth. So what I want to do is I want to first give you my perspective on what the advantage of Ichimoku is from a trading perspective. And then I'm going to show you the technical journey and where it fits in with all the other technical indicators and systems and so forth out there. So let's begin the journey for advantages. The very first advantage it has is it's a visual based system. It's very simple. There's not many elements on there. It's not going to be deaf by indicators at all. Believe it or not, you have everything within the Ichimoku system to a point you do not need any other indicators at all. If you see other people using any other indicators with Ichimoku, it's telling you that they really don't understand the indicator at all. Reason why is the Ichimoku system comprises of 5 different elements, 5 different indicators that are put together to come up with a system. So you really don't need any other indicator out there. Some people use RSI, some people combine it with moving averages and so forth. You really don't need to do that at all. Keep it simple and trade the probabilities. And that's what I found, and it's basically has worked consistently for many years, and it's one of the reasons why I was able to leave telecom and turn into managing money, and eventually now pretty much trade my own money since 2010. Second, it allows you to determine the sentiment for an instrument within 1 second. The biggest battle that most people have is determining if that instrument's bullish, bearish, or neutral. And if you sit there and take an instrument and on a particular time frame and you take a poll with 10 different people, you'll probably get 8 different answers. And that's not good at all. We're here to trade, which means we're here to trade probabilities. In order to trade probabilities, you got to remove the subjectivity. So that's the very first thing Ichimoku does is that it removes the subjectivity from trading. So you're going to see from this visual aspect, you'll be able to determine within one instrument if an instrument's bullish, neutral, which means consolidating, or bearish. And believe it or not, everyone that understands Ichimoku will come up with the same answer as you do, so that subjectivity is removed so everyone knows what the sentiment for that instrument is. Third, it has money management built into it. When I went down the technical journey, I learned technical analysis, then I learned money management. And believe it or not, I kept on blowing out my accounts. That's not how things should be. And think about this. 98% of retail traders fail. Why? You're all being taught the same thing. And I was being taught the same thing, and that's how I blew out my accounts. So what really needs to happen is money management needs to be the key foundation for your trading. And your technical system needs to be built on top of money management. Now, when we talk about money management, there's 2 metrics I'm looking at. One is the win-loss percentage, and the second is reward risk, and they go hand in hand with each other. Okay, in order to be consistently profitable, believe it or not, you have to maintain a 3-to-1 reward risk ratio. If you're maintaining a 3-to-1 reward risk ratio, you could be 70% correct and 30% be wrong and still be consistently profitable. That's the key to this business, and that's how you're going to be consistently profitable, and you could create an income, i.e. salary, just like your job. Okay? The next advantage is you have the ability to optimize. Everything's within the system, so you have 5 different elements, and you could use those elements different ways, and you could optimize and improve your win-loss ratio, improve your winning percentage, and so forth within the indicator within itself. This is the other key aspect is that with Ichimoku, you could do multiple time frame analysis. Why? The indicator is not based on closing price. Most indicators out there, if you think about them, are based on closing price. Most popular is moving averages. People are using moving averages for support resistance. You can't really do that at all. The reason why is you have to wait for the bar to close in order to determine what the support resistance is. That delays things, and you really can't do that at all. The Ichimoku system is based on highs and lows of the bars, so you could use the indicators for very accurately to find the key major institutional support resistances, and we'll show you exactly how in just a moment. Next, it's a simple trading plan. Goshi Asada, as I mentioned, Ichimoku means at one glance. That means the whole idea of the system is to keep things simple and trade the probabilities. We do not want to complicate things at all, and that's the key advantage of Ichimoku. Next, forecasting. This is something a lot of people don't do, or they wait for things to happen. A lot of technical traders, including myself before, was waiting for things to happen. For example, moving averages. You're waiting for 50 to cross a 200-day and so forth. When that happens, you're waiting for an action to complete, and you're giving up a lot of the reward. If you give up a lot of the reward, you're not going to get a good reward risk ratio. In fact, it's very hard to get a 3-to-1 reward risk ratio if you're waiting for something to occur and so forth. So you got to have the ability to forecast and predict with high probability on something starting to trend or something starting to reverse. And with the Ichimoku system, you could accurately, believe it or not, do that too. Next, the system can be used for any instrument in any time frame. Why does that matter? Well, a lot of people will sit there and use it create a system that will sit there and work for particular instruments or particular time frames. They're curve fitting, and eventually it will fail. We're not looking to do that at all. We've been trading Ichimoku from various time frames, from a tick level to a 10-minute, 30-minute, 60-minute, 2-hour, 4-hour, daily, weekly, monthly, and so forth. Even range charts, Renko and Kaji charts too. And I know it works for every instrument out there and any time frames and so forth too. As we mentioned earlier, since the system is based on highs and lows, it allows you to pretty much find the key support resistance levels without the subjectivity. Okay? Now let's begin the journey of technical analysis. I want to show you where this fits in terms of all the technical systems out there or technical indicators, and kind of show you from my perspective on where this fits and why it's a huge advantage for you in your trading career. In 1996, I graduated my engineering degree, but trading was my passion and hobby, so I began the process of learning technical analysis. And your path may be very similar to mine, if not may vary, but this is a path that I've noticed for years that a lot of people follow, and it's pretty much the same one I do. The very first thing you do is you learn price action. You learn what a bar is, the open, high, low, close. You learn about the Japanese candlestick patterns from the dojis to islands and stuff like that. So that's the path most people take. After you learn about the Japanese candlesticks, then you begin the path of learning about pivots. You learn about pivot high, pivot low, and then you typically will sit there and learn a technical system based on pivots. After you graduate to that, most people move to moving averages. From moving averages, with moving averages, you'll notice that you typically are having to add RSI or some other momentum indicator for divergence and so forth. So what happens is eventually things get complicated when you start using moving averages, because moving averages is a delayed indicator. So eventually you're going to start incorporating moving averages with chart patterns. So chart patterns starts to optimize moving averages and allows you to sit there and say, I'm only going to look at moving averages crossover when a certain chart pattern occurs. By doing that, what's happening is that chart patterns is a timing element and keeping you focused to only trading moving averages at a certain point. So it's an optimization technique on moving averages. Eventually, from chart patterns, people start learning Fibonacci, and this has become the most popular technical system in the world for years, and it still is today, believe it or not. And believe it or not, Ichimoku is based on Fibonacci too, and I'll show you that in just a moment. So Fibonacci basically is where everyone pretty much engages. A lot of people love the Fibonacci numbers from 50%, 61.8, which is the two critical ones, and of course there's many ones out there where you could get into very sophisticated things in Fibonacci, from Fibonacci clustering to extensions and so forth. Eventually, if people continue down the Fibonacci path, they learn how to optimize Fibonacci, just like you did with moving averages. You do it with Elliott wave. So Elliott wave is a certain pattern that uses Fibonacci. So just like chart patterns optimize moving averages, Elliott wave basically optimized Fibonacci. So now what happens is that in Elliott wave, most Elliott wave courses, if you take them, you'll sit there and wait for the institutional wave to occur, and then you see the pullback, which is the profit taking, and then they're going to show you how to sit there and get on where it's going to stop, reverse, and the trend's going to continue, and the institutions are going to supposedly come back into and start taking this instrument up or going down with the institutional wave 4 and so forth. Okay. And then eventually what happens is there's Ichimoku. So what is Ichimoku? Believe it or not, Ichimoku optimizes Elliott wave, Fibonacci, and everything out there. So this is the pure optimization that I realize out there. And the why. Ichimoku allows you to trade the institutional wave. In Elliott wave, you waited for that institutional wave to occur, and then you traded after that. over here in Ichimoku, it allows you to trade that institutional wave, and it allows you to show you easily where that institutional wave is, which is the highest probability trending wave with the best reward risk ratio and so forth. It also allows you to optimize and trade the Elliott Wave 4 a lot better. So Ichimoku, in my eyes, is optimization for all these other technical systems out there. And the other key thing is that it keeps it simple. It has money management built into it, has psychology of trading built into it. So it's a complete system that has everything that you need in order to be consistently profitable. So now let's break down the 5 elements in a very simple way. Let's now talk about the 5 components that make up the Ichimoku system. We're going to talk about this from the high level reason why there's individual videos that cover each one of these elements in great detail. But I quickly want to kind of go for everything in detail with you. So here's a regular price chart. Here's the first Ichimoku indicator. Here's this black line here. It's squiggly, and then there's points, there's flat, and then so forth. This is called basically the Senecal span B. It's sometimes called the leading span. In other words, this line here, or this indicator, basically represents support resistance for 52 bars. If you really want to know the formula, it's right there. It just takes the highs and lows for 52 bars and averages it out, and that basically is it. Okay, so this is a Senecal span B indicator. This is the most popular indicator out there and the most strongest indicator out there. Okay, so this is the key one that you really should be basing a strategy around, believe it or not. Okay, the second indicator that Ichimoku has is called a Senecal span A, and this is this little light gray line here, and this roughly represents 18 periods, support resistance for roughly 18. Notice I said roughly. It's not exactly 18, but roughly 18 periods. Okay, and you could see here. Now, the thing in Ichimoku is that what they've done is they color shaded between the two. So when the Senecal span A is above Senecal span B, they shade it this blue color here or purple color, and it varies. The color varies from charting brokerage platforms out there. Some people use blue. It does not matter at all. But basically, when the Senecal A is above Senecal B, that means it's bullish. And that's why you have this little bright color here. Red is typically used for when it's bearish, and that's typically when the Senecal A is below Senecal B, which basically means the 18 bar support resistance is below the 52 bar support resistance, and that's why it's red. This is called the Kumo cloud. Okay, now when you talk about Kumo cloud, most people say this is the cloud or the Kumo cloud. So if they just say cloud or Kumo cloud, they're going to compare the price to the cloud below you or above you. If they reference and say future cloud or future Kumo cloud, then you're going to look at this cloud, which is here, which is 26 bars forward, forecasted forward from the current bar. So again, this is the current Kumo cloud. This is the future one. Okay, and when we go through this cloud in great detail in the video, we'll talk about how you use one over the other and what advantages it gives and so forth. Next is a 26 bar support resistance, which is this green line here. That's called the Kijun-sen or baseline so far. So sometimes the Kijun-sen is called a container of the trend. When something trends, price should respect this green line, and at that point it should be contained. Okay, since this is the container of the green line, the trend, we're going to use this support resistance as our initial stop and our trailing stop. What do I mean by that? So there's a buffer below. If this is a bullish trend or price is above the green line, this is a bullish trend. So what we're going to do is we're going to subtract the buffer off that green line and use it for our initial stop and trailing stop. Okay, what is that buffer? Our suggestion would be use a buffer that's based on volatility. So if you take the average true range for 26 bars, since this is a 26 bar support resistance, and you take a certain percentage. Some people take 75%, some people take 50%. It depends on your risk tolerance level which one you want to use. Okay, but here we kind of give you example here where our green dots are our stop, and all it is a buffer off the green line, and the green line represents support resistance to 26 bars and is basically the container of the trend. Okay, the next support resistance is 9 bars, which is this red line. Notice price and this red line kind of hug each other and very close with each other. Okay, and the formula is basically here. It's called a Tinkinson conversion line. A lot of people use this red line for strategies. So just like moving averages, basically where the 50 crosses the 200, one of the most popular Ichimoku strategies out there is when the Tinkinson, the red, crosses over the green and vice versa. Okay. However, I don't use it for that at all. Reason why is I do not believe that you should be using a 9 or 26 bar support resistance for a strategy when the most important support resistance is 52. So for me, my strategy is based on this SKB right there. And once we get into all the individual videos, you'll see exactly why. Okay, for me, what the red line is more towards money management. When I have a nice little profit and I want to protect my profit, i.e. stop from going round trip, I will stop using the stops off the green line, and I'll use a buffer off the red line and have a tighter stop. So for me, when I want to protect my profits, go into defense mode, I'm going to start using that red line plus or minus the buffer, depending on if you're bullish or bearish. And by doing that, when you use this for that purpose, what's happening is that you're improving your reward risk. Okay. The next indicator you have is called a Chical span, which is right there. And what all that is the current closing price shifted back 26 bars. So if you look at the closing price of all these bars, that's pretty much the pattern of this purple line here, which is a Chical span. Okay, this is our momentum indicator. It's the only Ichimoku indicator that's based on closing price. All of the others are based on highs and lows. If you look at them, all the others are 50% Fibonacci level indicators. Okay, this one right here represents momentum. So when you get to the momentum video, you're going to learn that you could use momentum to sit there and optimize your win-loss ratio. So the Tinkinson is used to optimize reward risk, whereas momentum is used to optimize the win-loss ratio. So this now completes a very high level of all the Ichimoku elements out there. If you go back to ichimoku.org and scroll down, you'll see the individual videos for the Tinkinson, for the Keijinson, for the cloud, and so forth out there, where we will go for everything in detail. All these videos also follow along with a free ebook that we basically you could sit there and download. Again, all the information is on ichimoku.org, which is right there. Okay, thank you and have a good day.